Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, yesterday's action reversed the previous day outside reversal bar. In last night's video, I asked the question, can we confirm the reversal? And the answer was no. We needed to close lower on Wednesday to confirm Tuesday's downward reversal. We were unable to do that. It all came from a simple tweet from the president, as he wants to continue stimulus, but he wants it in specific areas. We already know that. That's been what's been going on all along. I've seen a number of comments around the channel and that people think they're in the minority of folks that think there's going to be a deal. The opposite is true. The markets think there's going to be a deal. That's why we traded up today. If you think you're a minority in that process, you're completely wrong. You are actually in the majority. The majority of people think there's going to be a deal. As I've been saying, I don't think there's going to be a deal. The House/Nancy Pelosi will not hand a victory over to Trump. And no matter how bad he wants it, I don't think he'll get it. So we are going to see more volatility around this because nothing changed yesterday from the tweet. It's the same thing that Republicans have been asking for all along. They want it to be very specific. They don't want all the other things that the Democrats are proposing. And I will continue to tell you that they're not trying to make a deal. This is all posturing by both sides. It's an election. We're weeks away. And that's just how it's going to continue to unfold. This uncertainty will continue to be built into the sentiment. There's something else that I'll go through in detail here in a few minutes in the technical section, but in the last 3 sessions, we've had 2 RXT sell signals. On Monday, we got an RXT sell signal and the market reversed down. Today, we reversed up. We've got yet another RXT sell signal. I'll go through all the details here in this technical section. Is definitely signaling more back and forth whipsawing action. As we come into today, market participants are going to be focused on the continuing claims number as well as the claims themselves. Claims are expected to show 850,000. The continuing claims came in at 11.7 million last week. Anything under 11 will be bullish, but they completely ignored that number last week, if you recall. There's not going to be a stimulus deal today or tomorrow, and the markets are going to have to deal with this as we come into Friday's close. So in the end, the uncertainty will continue. Don't think that we're out of the woods here and the markets are going back up. There are some interesting technicals setting up, but it's nothing more than the continuation of the pattern that I've been talking about over the last week or so. The other thing that continues to unfold is we're getting more buy signals on our short-term database. We're definitely getting more traction there, which is setting up a bigger pattern. I'll go through that in just a minute. And I think market uncertainty will continue. Let's take a look at the charts and see what they're telling us for Thursday. As we review the WaveTech database, as I mentioned in the opening comments, we did see further traction. We had another 1,700 new buys, only roughly 90 sell signals, giving us a bullish ratio, moving the percent bullish up to 31.94. There are currently 5,260 short-term trends on, leaving 11,206 symbols with no current positions. As I've mentioned in the last couple of videos, the next benchmark to watch is 42% bullish. If we get above that level, that's going to indicate that a short-term trend will continue. For now, at this level, it still suggests that we're going to remain in this sideways choppy range. This is a short-term model, even though the longer-term models, the intermediates, continue to be quite bullish. As we review the S&P 500 futures, we are seeing the market stronger overnight, up to 34.25. And as I discussed in last night's video, we had the downward reversal, and we needed to close lower to confirm that reversal and suggest that we would start down in the C wave. What it looks like we have now done is this upward C leg is continuing. If you recall, going back several videos ago, I was expecting a 5-3-3 pattern, and it now looks like we're going to get a 5-3-5 pattern. Today will be the 4th day of this pattern as we continue to trade up. Now, R1 is 34.25. We printed just above that just a few minutes ago. It's about a half hour to the London Open right now, and we're seeing that print up to R1. Now, it's possible to get to R2. I don't really see that happening today. There is a strong possibility of yet another downward reversal. Go down to test that 10-day moving average, 3360, but moving up about 20 handles per day. We bounced off the 10-day moving average yesterday. The low was 3332, and that average was 3341, so we spiked through it a little bit, and then we saw the big reversal. Now, one of the things that's happening is the PPMs are already stalling on this rally. The configuration here continues to suggest that we're in this corrective phase. This is not an impulse wave, and so we're likely to see some backfilling. Relating back to the database analysis I did a few minutes ago, we're likely to see the database continue to get more traction while this market goes in this sideways range. The target was for a possible 0.618 target. That will be more accurate on the cash markets that I'll cover in a minute. The 0.618 number is 34.33. Above that, we would go to 0.76, which is 34.89, which is getting very close to that 3,500 level. This pattern could extend, but it does appear to me we've got today and probably Friday to complete this 5-bar pattern that I'm talking about. As we switch over to the cash market, the pattern that I've been discussing over the past several weeks since we made the September high is that we have a downward ABC. Everything is in 3, so therefore it is a corrective wave, which this is why I continue to keep the Fibonacci grid on here for the nightly videos, because this is the range which we're going to work within this pattern. So we have the 3-wave down. I've been discussing this. We have a move up here to the A wave. Looks like the B wave here was a simple 3-bar, and then we're working on a 5-bar, and we could go as high as 3,500, which would be a 0.76 retracement. I still believe, based on the calculations that I showed you in Monday's video, is that we're likely to move right to this 34.43 level. In fact, there's a range of 34.38 to 34.43. That is going to be your target zone for this pattern. Thursday will be the 4th day of the pattern. Friday will be the 5th. I mentioned in the opening comments, we've had 2 RXT sell signals. We got one on Monday. We had the downward reversal. We reversed that yesterday by a higher opening. We opened right near the 40-period moving average. The opening was 33.8456. The moving average was at 33.87. It popped right back above there, but we actually closed at 34.19. RXT was 34.15. Right here we have another sell signal suggesting we are likely to get 2 to 3 days sideways. What is likely to happen then is that this grid will flatten out and we'll go into a range here. As we review, the grid is going to be 34.32, very close to that 34.38 number. The R2 number will be 34.46, right in the target range of the Fibonacci calculations I did on Monday's video. So we're still looking at a 34.32 to 34.36 level. It could print up there today, but once again, we need to watch for a reversal around 34.32. We'll have to watch this thing very closely, how it trades today, watching for yet another reversal. But market participants they're building in that expectation. So 2 things are likely to happen here. They'll get the deal and it's priced in, or they won't get the deal and it will be more disastrous, because then there'll be a failure and there'll be more than just a 1-day reversal. It'll be multiple days. Next market we'll review is the NASDAQ. NASDAQ also is trading higher. Right now up 0.76. We're up 86 handles. As we look at the grid for today, R1 is 11,537. We've traded just through that. R2, 11,612. We're a little ways away from that, so we're looking at a possibility of an R1, R2 high for today. S1 11,402. The low's been 11,469. What will signal a reversal would be a penetration of 11,402. But expect to see this 40-period moving average, which is at 11,424, continue to be a key number. But there's something that's about to happen here, and most people talk about this as one of those crossing of moving averages. Typically, when we get a cross of the 10-period and a 40-period moving average, that is a negative cross for me. You'll get at least 2 to 3 days down. It'll actually signal a top more times than not. I know a lot of folks look at those positive crosses as a big event. In my opinion, they usually will backtrack, at least initially, after when those signals happen. And we're very close to that happening, and that will happen on Friday. 0.618 target for this upward ABC would be 11,773. That would be above the RXT for the day, 11,755. If we're going to see that print, that's not likely to happen until maybe Friday, depending on how these fundamentals numbers come out. But we're definitely seeing some pretty good strength overnight, and over the past several nights where we see a lot of strength overnight. We'll see what kind of follow through we get through tomorrow, but that is a setup for tomorrow's activity. Next market I'll cover is the US dollar. The dollar continues to be very flat. We are seeing a little weakness overnight, trading down to 93.55. As I mentioned in last night's video, the key levels around 93.40 to 93.28. That's S2, S3. Those same numbers show up on the weekly charts. So this pattern appears to be completing as long as we stay above that 40-period moving average, which is 93.27. We're likely to maintain this overall pattern. What I see happening here from a pattern standpoint is that we had an ABC up. Now we're setting up potentially an ABC, and we could see one more move down into these support levels down at this level, especially with the negative ppms that are there. So we're likely to see continuing pressure on the downside, but if it holds above this 40-period moving average for the next 3 sessions, that's going into next Monday, then we're going to see this thing hold and probably start this rally up that I have drawn in here. The final market that we'll cover tonight is gold. Gold continues to hover around its 10-period moving average at 1898.70. The low's been 1886, the high 1895. Pretty quiet session overnight. There's a lot of resistance overhead. 1917 to 1935 is substantial resistance, although we're starting to see some of the downside negativity dissipate a little bit. This market is stuck in this sideways range. Will continue to be restricted by the 0.236 Fibonacci number at 1906, and then 1942 corresponds with the 40-day moving average that is at 1935. And just a very quick review, as I mentioned in last night's video, we're going to remain between the 21-week moving average and the 10-week moving average. That range is 1874 to 1941. All these parameters are very tight and very defined. Like I mentioned in last night's video, my biggest concern are the accelerations and the downward moves that are happening in these 3 ppms. This is telling me that there is likely to be more downward pressure, and that will be signaled by a close under 1874. If that happens, then we're heading for this green line here, which is the 40-week moving average at 1780. It's rising at about $9 per week, so that'll be 1790 as we come into next week. If we do close below 1874, we're heading down into the 17 handle for sure. This will complete tonight's video. Thanks for watching. We'll talk to you tomorrow night.